Apartment construction levels have gone up in San Jose. Rent growth levels have gone down, but not that much. Overall apartment stats in San Jose remain very healthy. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your San Jose update. Two big stories in San Jose, rent growth and construction. We're going to start with construction. There's a lot of it. 6,584 units underway at the end of Q3 2013. That's about the same level this market has seen now for about 2 straight years, since this is a market that developers targeted early in the recovery, and it's a big number for this market as well. Adding 6,500 units would expand the apartment base here by 4.4% once all those units are built. That is one of the biggest clips in the country. And here are those rankings. This is the percentage growth in total apartment stock once all units currently underway are built. You can see San Jose is number 5 in the country and number 1 in the West Coast. The only markets above San Jose are Raleigh-Durham, Austin, Charlotte, and Orlando. And there are only 4 other markets at 4% or more, those being Washington, D.C., Denver, Dallas, and Seattle. Now let's take a look at where construction in San Jose is going by submarket. And so what we've done here is combine units built in the past year with the number currently under construction. So that gives us a better idea of what's happening in the fullness of this cycle. And you can see that North San Jose, Milpitas claims a gargantuan share, 4,839 units. And let's put this in perspective a little bit. Once you add all of those new units into this submarket, the total size of the apartment base in North San Jose will have ballooned by 78%. And that is a basically unheard of number. We're completely changing the dynamics of this submarket. And a few other highly active areas to highlight: Central San Jose, Mountain View, Palo Alto, Los Altos, and North Sunnyvale. So what effect is all of this supply having on apartment fundamentals? Well, not a terrible amount, but some for sure. Let's start with occupancy before we get into the rent story. Occupancy is now at 97.1%. Still quite strong, but down from the peaks we had been seeing earlier in the mid 97% range. Over the past year specifically, occupancy inched down 30 basis points. And rents, they're still climbing at a very nice pace, but nothing like what we saw in 2011 and 2012. Same-store rents for new leases in San Jose increased 5.9% year over year through Q3 2013. That's less than half of the peak pace seen earlier in the cycle. But San Jose still ranks high in the national leaderboard for year-over-year rent growth. It has, though, fallen behind the other Bay Area markets over the past couple of quarters, behind Oakland and San Francisco, both actually for 3 straight quarters. And it's allowed Denver to slip in above it as well. Oakland, Denver, and San Francisco rank 1, 2, and 3, and Seattle ties San Jose for number 4. So what's going to happen going forward? Well, the good news is the economy is still humming right along. It's not quite grown at the really brisk pace that we saw a couple of years ago, but we're still adding a good number of jobs, and there's a lot of good pent-up apartment demand here as well. So occupancy should slip a little bit, only because of new lease-ups being added into the market, and rent growth may cool off just a little bit as well, but we still think this market's going to produce some nice rent growth, and San Jose should still be among the national leaders. And that wraps it up for San Jose. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.